Third on our list this morning, in his annual letter to shareholders, Warren Buffett delivered much of what we've come to expect over the years. He admitted mistakes, he commented on the markets, he offered up some folksy wisdom, and of course he talked up America. He also dished out some criticism of some long-held practices in corporate America. First up, though, let's start with the numbers. Berkshire earned $42.5 billion in 2020. That was down 48%. $21.9 billion of that was from operating earnings. That's the metric that Buffett says is the most important. Those operating earnings were down 9%. But profits for Berkshire for the fourth quarter were up 23%. That was thanks in large part to the big gains that we saw in the stock market. Berkshire has a lot of big holdings, and those holdings were up. Every year in his letter, Buffett gives an assessment of the company, highlighting what he thinks are the most important performers. And this year, for the first time, the investment in Apple made that list. Berkshire owns 5.4% of Apple, which, based on Friday's closing price, is worth almost $110 billion. Buffett called it one of Berkshire's family jewels, along with Berkshire's property and casualty insurance group, its Burlington Northern Santa Fe Railroad, and Berkshire Hathaway Energy. Berkshire paid $36 billion to buy that Apple stake. It accumulated the purchases starting in late 2016, and it went through the middle of 2018. And since then, it's sold a small part of the stake for $11 billion. It's also received more than $2.3 billion in dividends from Apple. So all in, that means that it's closer to $22.3 billion that they paid for the stake that is now worth almost $110 billion. By the way, that stake, the percentage that they own in the company, has grown thanks to buybacks at Apple. Buffett pointed out that Berkshire shareholders have seen their portion of Apple's profits grow because of buybacks at Apple and also at Berkshire, which bought back $24.7 billion of its own stock during 2020, and that was a record. Stock buybacks are under fire in Washington right now, with politicians like Elizabeth Warren labeling this practice market manipulation and threatening to pass legislation to keep companies from doing it. But Buffett defends this practice in the letter. He wrote, "The math of repurchases grinds away slowly but can be powerful over time. The process offers a simple way for investors to own an ever-expanding portion of exceptional businesses. And as a sultry Mae West assured us, too much of a good thing can be wonderful." As for the markets, the mistakes that he admitted, Berkshire took on an $11 billion write-down last year. Most of that was for Precision Castparts. That's a manufacturer for the aerospace industry that it bought back in 2016 for $32.1 billion. "I paid too much for the company," Buffett wrote. "PCC is far from my first error of that sort, but it's a big one." Now, for the criticism of corporate America, Buffett took conglomerates to task and explained why most of them stink, of course, present company excluded. The big problem with most conglomerates, he said, is that they only buy other businesses in their entirety, and that limits the pool of available businesses because most great companies don't want to sell out. It's also exacerbated when the conglomerates then agree to overpay for those companies that they do buy, often with an inflated stock price of their own. He writes, "Wall Street loves the fees that deal-making generates, and the press loves the stories that colorful promoters provide. At a point, also, the soaring price of a promoted stock can itself become proof that an illusion is a reality. Eventually, of course, the party ends, and many business emperors are found to have no clothes. Conglomerates earned their terrible reputation." As always, Buffett cheers the American spirit. He lays out some of the stories that he's witnessed across America, success stories, companies like Clayton Homes and Pilot Travel Centers, Nebraska Furniture Mart and National Indemnity that were built out of nothing by the people that he's known and invested in. He writes, "In its brief 232 years of existence, there's been no incubator for unleashing human potential like America. Despite some severe interruptions, our country's economic progress has been breathtaking. Never bet against America." And guys, for the comments on the markets, they were actually pretty sparse this time around, but he did say that bonds are not the place to be. And that echoes what we heard from Jamie Dimon back in December when he said he wouldn't touch treasuries with a 10-foot pole. A lot of commentary on this, and I should probably point out that this is the first time in 14 years that Buffett hasn't joined us live on this show for 3 hours to talk about this.
Shepard Smith here. Thanks for watching CNBC on YouTube.